Welcome, everyone. Today, I have several special guests. We can talk about some amazing real estate investment opportunities. We can do a deep dive in this particular market. You will be very surprised or even shocked. And even too good to be true, this type of investment opportunities are available for real estate investors. My name is Seewing Yee, and my co-host, my special guest, my weekly co-host, Julie. How are you?
Fine. Thank you, Seewing. How are you doing?
Yes, and of course, the other special guest is Mr. Caleb Canazzi from Buffalo Turnkey. The name of his company is Buffalo Turnkey. They provide out-of-state investors from all across the U.S. and across the other side of the ocean. You cater to investors to buy into your market. And let's talk about that. Okay, so without further ado, let me share my screen and go through the process. And Julie and Caleb, you're welcome to share your thoughts as I go along with this video. These properties are, let me put you guys over here. So, yeah, these properties are the weekly listings that come from you, Caleb. Actually, before we begin, Caleb, I went ahead of myself. Before we begin, can you share with the audience who is Buffalo Turnkey? What is your investment philosophy and what kind of system you use to help people to buy rental properties? Go ahead.
Yeah, sure. So there's a lot there. So I don't know how long you want me to introduce us, but essentially we buy properties almost exclusively off market. We're finding properties through various advertisements and buying auction properties. We do go to pretty much every auction. We do online auctions, but mostly in-person auctions, which have been very good for finding properties. And then a lot of these properties, they're dilapidated. You have to buy them cash. So we will fix them up and then we will sell them on, and we'll rent them and then sell them on. Not every property that we buy is like completely dilapidated or anything. There's some properties that are actually in pretty good shape, and then we don't have to do that much to them. But basically we buy them for a discount, and we have the ability to really just fix them up for a lot cheaper than most people are able to do it, and then sell them on to investors who get like a turnkey property per se, so that they don't have to do that much. We'll get income and expense statement basically every month on the properties.
Sounds good. Turnkey by long distance, by almost passive, and at the same time, investors own those property themselves 100%. And you have a turnkey approach. You have a in-house property management. You do everything for out-of-state investors, almost like just you. Yeah. Anyway, and of course, Julie here, she went all in several years ago. She bought a total of 6 rental properties from you guys. And Julie bought a combination of single-family home and several duplexes. Some she did it with 20% down payment, and some she did it with her self-directed IRA. And Julie is very proud to say, in fact, Julie, you have some very brief, Julie, what have been your experience in terms of cash flow, appreciation, and maintenance issues, and what's your overall thoughts around the portfolio that you scaled through?
Thank you, Seewing. We actually started working with Caleb and his team back in 2021. So it's been about 3 years now. Actually, I think it'll be 3 years in July that we closed our first property with them, because I remember it was right around my birthday. And it was a great experience. Caleb, I tell people all the time, Caleb was super patient because I'm at the opposite end of the scale in terms of generations, and he's very young, but he was always very patient and answered all my questions. And I probably had 10 million questions that he had heard 10 million times before, but he was always very patient. And we worked through the process. And I think the first one we closed was in my self-directed IRA. And then we put a duplex in my husband's self-directed IRA. And once you understand the system and you get it, the second, third, fourth, fifth one, sixth one, it runs pretty smoothly. In fact, I think the last 2 we were able to close simultaneously. We put them in escrow at the same time, and then we closed them on the same date. So that was pretty exciting. But the Buffalo Turnkey is a great team, family business, which I can appreciate. I grew up in a family business, so I appreciate the connection and the intimacy and the integrity that goes along with working with the company like that. And they're all great. And then we use their property managers, ABC Property Management, to handle our properties. And not only are Caleb and I at opposite ends on terms of the generational scale, but we are at opposite ends of the country. I'm in California. I've never been to New York. So I was putting a lot of trust into the team, and we have not been disappointed. So it's been a great experience.
Good to hear. Good to hear. Yeah. So what I'm going to do is to go over the current listings, and every couple of weeks, for Turkey and Caleb, he email us the off market listings, mostly exclusively for investors. He does sell to primary homeowners in his market in Buffalo, Niagara Falls. But each time, I know we've been working together for a number of years now, 6, 7 years, I forgot. A lot of our investors are purchased through your system, and most of our investors are located in California, and they have a very good experience. But your deals, your off-market deals, it's just simply amazing. So let's go over the pro forma. I took the liberty of going over 2 properties, although your listing, your spreadsheet is when I get it, is so overwhelming. Overwhelming means enticing. I feel like I'm on a candy store, because when I go over your inventory spreadsheet on a bi-weekly basis, the returns is just off the chart. And sometimes I know your system so well, I'm not surprised anymore. And yet I am surprised every single time I get the new listings. And in new investors, as we can go through this actual pro forma of some of your listings. Some of these properties may have been sold, not sure, but this kind of numbers we can share with you, and Caleb gonna be very transparent in your analysis of these numbers that we're gonna share, which is mind blowing, but it's true. So for those of you guys who are watching this particular video, you need to have an open mind to see, there are opportunities out there regardless of what's going on in economy, recession, inflation, housing crash, or mortgage rate, all these volatility that's going on, all these negative headlines going on, all this doom and gloom, the world is crashing, whatever. At the end of the day, if you buy in a good market, everywhere, the housing market is very local, and Buffalo, Niagara Falls, they just continue to do their thing. So with that in mind, Caleb, so just I'm going to go through 2 pro forma. So this particular pro forma is, which is mind-boggling. So I want to make sure that we do this correctly. All right, this single-family home is located right here. And you may, by memory, Caleb, you may or may not have a detailed information about this property, but do the best you can, all right? This particular property actual address is listed at single-family home. It's turnkey or rehab, I think, for $53,500. You couldn't buy a Tesla for this amount of money. A Tesla, nice shiny object, but it'll depreciate in value. But instead of buying Tesla, you buy an income property, will give you a whole bunch of return. And let's go briefly go over my quick analysis. Then Caleb can chime in, and you too, Julie. So this property, I found the lowest property within your listing, off-market listings, single family home, $53,000. It rents for $785 gross monthly rent. I do my minus monthly debt obligation, taxes, insurance, property management fee, and the vacancy factors right here, and maintenance percentage I also use. I try to be as realistic as possible. And someone put 40% down payment, even at a mortgage rate of 6.8%, investor projection loan rate. At the end of the day, we still have a net monthly cash flow of $122. I know it's not that much, but this is just the beginning. This is just the beginning of the process. I'm not going to go over the financial indicators too much, but these numbers are off the chart, is above the numerical benchmark for real estate investors. So rent to value ratio is usually 1% is the best scenario, but this is a 1.5%, capitalization rate 9.1%, cash on cash 10%, total return including 3% appreciation rate, total return 24%. So briefly, Caleb, where else in the country and we buy a turnkey property, tenant already in place, less than $15,000 down payment, total including closing costs, using the leverage, using a loan, and still achieve positive cash flow? Tell me quickly, a mere couple of minutes, Caleb. I don't want to tell me about the numbers of this property, why this is so enticing, even at such a low cost. What are your thoughts?
Yeah, so for this property, the numbers speak for themselves. So this one, I didn't realize you were going to bring. This one we actually already sold like last week about. Actually, a local realtor came to us. He's like, I want to buy this property. And he's actually buying it for cash. So if he's getting that cash on cash return, he's going to rent it out. He said he's going to rent it out for a much higher great too. He's like, oh, I'm going to get a Section 8 tenant. And it's a pretty sizable house too. Like a lot of times Section 8 goes off of the size of the house for how much they pay. He's really like over the moon about the property. He's like, oh, thank you so much. He's very happy to be buying the property essentially. So this one is sold, but yes, we do get properties like this. This one is particularly higher numbers here. There was nothing too special about this property in particular as far as like the look of the house, but definitely an older house. We did a kind of a quicker rehab, like we did a trash out, carpet, paint, fixtures, and that sort of thing. So when we're rehabbing them, it depends on like not all just like all new kitchens, bath. Like it really depends on the house, what it needs and what we do to it. But this one in particular is already sold.
Understandable. Yeah, great deal. So Julie, do you have any quick thought before we go to another performer?
I wish I got it. That looks like a really good deal. I think I would say that is, particularly being in California, I think you look at prices that are like $53,000 and you're thinking, oh, that's like impossible. But that's very realistic. And that's really in line with the properties that we bought. In fact, I can go one better. We actually bought one for $48,000. Those are very realistic prices, very realistic numbers. And yeah, to buy it all cash, they'll throw a Section 8 person in, guaranteed rents every month with the Section 8. So it's a really good property. My hat goes off to the realtor.
I know you bought it 3 years ago, Julie, at $48,000. Do you know what's the estimated value, market value of that particular house that you bought $48,000 3 years ago? Just a rough estimate.
Interesting. I haven't looked lately, but I think the last time I looked, it was around $62,000 or so.
Wow. So $48,000 you bought it 3 years ago. Now it's around 60 something thousand. So you made some pretty decent return on your property in just years.
Yeah, we just got a new tenant in that one too, because the other tenant was not great. But we got a new tenant in, and they were able to raise the rent by about a little over $200.
Yeah.
So we were getting around 7 something, and now they raised it to 1,000. So
what was the number of days of vacancy before the second tenant?
it wasn't quite a month. It was maybe a little less than a month that it took them to get the old tenant out and then do the little rehab or whatever, fix it up, and get the new tenant in.
By the way, we don't have the time, Caleb and Julie, to go over all the different type of formats. Caleb not only do single family homes, duplex and triplex and fourplex. Sometimes you sell 5 and 6 units within your investment portfolios. Again, anyway, now this next performer, it's just mind-boggling. If my numbers are, Caleb, if my numbers are incorrect, please correct me if I'm wrong. But this is a duplex 2-unit Niagara Falls coming from your listing a couple of weeks ago. I don't know whether it's so or not, but this kind of property, you always have it. Every week, every month, you have similar listings such as these. Okay, anyway, this property is duplex for $69,000, and investor will put 25% down payment, which is minimum down payment, even a 6.8% mortgage rate. But by the way, something investment philosophy I always preach to my client, Caleb, that you date the mortgage rate right now. Date the mortgage rate, but you marry the house. So at 6.8%, you get it at today's rate, and the cash flow is still amazing. Then when and if the mortgage rate comes down in the next few years, you can always refinance at a lower rate, and the cash flow will increase accordingly. You can have a cake and eat it too. That's my expression. So here it is. 25% down payment on your duplex, finance it, leverage. The total out of pocket is only $21,000. And the gross rent on 2 doors, each door rents for a little bit less than $700. Total $1,350 gross rent. Then you minus the typical debt obligations, taxes, insurance, property management fee, your mortgage payment, and then the vacancy factor and the maintenance factor. At the end of the day, you have a monthly net cash flow of around $616. Annual net cash flow was $7,400. And look at this rental value ratio. We heard the 1% rule. We're talking about 2% rule. This is unheard of in today's housing market situation. And capitalization rate, the normal capitalization rate is like 5%. That's a minimal benchmark. In this case, 16.6%, which is mind-boggling. And cash on cash return is 35%. Cash on cash return is 35%. That means in about 3 years of annual net cash flow growth, you can recoup all your initial down payment or the initial investment. And of course, anyway, so is this number too good to be true, Caleb? Tell me about the background associated with this amazing low-cost duplex. Tell me about it.
Yeah, so this one we bought again off market, like basically all the properties we buy. So we bought it. There was already a tenant in place in the front unit. They were paying, I believe it's $800 a month, and then the back apartment needed work. So we renovated the back apartment to make it rent ready. We also did some exterior work, some like cutting back trees. I think we put gutters and like scraping paint on the windowsills and everything. It's sided otherwise with maintenance tree vinyl siding. But yeah, so we did that. We rented the back units, I believe $550, because that's a 1-bedroom back there, and it's a bedroom in the front. And the back unit, I believe, is even government subsidized. I can't remember if it's Section 8 or DSS or something, but I believe it's subsidized in some way or fashion. And the front tenant, he's already been there been there for a while. So it's not, as far as this calculable return on investment, it is. I didn't check all these numbers specifically, but I assume you did your calculations correctly. I know you're good with that, so they should be all accurate. One thing about this particular property is it's not in the greatest of areas, so that's probably why you're getting a little bit higher return on investment. We basically will try to buy anything that's a good deal and try to stay away from like the worst areas. But as far as this property goes, not the greatest of areas, and that's why you tend to get a little bit higher return on investment. But if you buy properties like in better areas, typically the return on investment might be a little bit lower, but then yeah, you're getting a higher, like normally priced property, also a little bit higher rent. So we have a variety of properties for sale. So the best way to know a little bit more about the property is really to ask or like do your due diligence. You could even use, a lot of people will use like Street View on Google, and you could click around and see the neighborhood. Those are outdated a little bit a lot of times, but that's one way for sure that a lot of
that's very helpful. I didn't mean to cut you off, but I was sharing with the Seewing's team about a week ago. I got to know the neighborhoods and the street names so good, having never been to New York. But I drive the neighborhood on my computer and look around and go down the alleys and everything. So yeah, they are a little outdated, but they do give you a good view of what the neighborhood looks like.
Yeah,
so,
or at least a few years ago. And a lot of these neighborhoods have improved like a lot. Like in particular, Niagara Falls, the government has put up a lot of more money, and there's like these programs where the people will fix these up, and especially there a lot of people are doing Airbnbs now in the zones, and they're like putting like really nice, like making these properties really nice and buying properties that weren't worth that much some years ago. But it really depends. I like that view to do a street thing, like what you did. That's
I got to learn the neighborhood real well. And then I think the particular houses that we were buying, I guess because the prices were all in the same range, they were all in the same general area. So I could get, if I knew the name of the street and the block number, I could tell if it was a decent neighborhood or not so good neighborhood or where it was, or is it near the hospital or whatever. So yeah, you do get to learn it pretty quickly. Like I said, not having ever been to New York. So I feel like I know the area.
Very good, Julie. Yeah, that's yeah. So Caleb, when you say it's not a great area, so the audience might need some clarification. It's not like it's not necessarily a war zone. It's not necessarily a whatever. It's still so. In this kind of like a C class, would you characterize this property sort of like a C class, C minus class neighborhood?
It's so hard to say because it's so subjective. Like I hear people categorize, like, so I have a hard time categorizing it, but it's not like areas, like we went to look at properties in Cleveland before, and they would take out furnaces. Like you couldn't leave furnaces in a vacant property, and they would hire people to like sleep in vacant properties, like for like a little bit. Like I was very shocked. Like they had their system for that, but it's not like that where you can't leave furnaces or how like that. To me, that's a sketchy area. But like this, like there's gonna be, it's not really the greatest areas, but it's not less. You're gonna get like I've gone to that property a couple times. Like I don't feel unsafe at all.
Right. You know. Well, your team, right? Personal Turnkey, your company was created by your father. As I understand, you guys been in business in your local market for several decades. Am I right?
Yeah, no, yeah. My dad's been doing this for over 30 years.
And of course, his your dad and you guys, you and your siblings and your sister-in-law, you're all in this business, the family business that we discussed. So for 30 years, you have to pick the right location, the right neighborhood. So you wouldn't pick any kind of property for investors to buy if you yourself are not comfortable with the location and what have you, right?
Yeah, so we feel like they're priced appropriately for that. That's why your calculated return on investment on that property is a lot higher than, say, a different property, some blocks up in a nicer area. And we have those properties too. So it depends on what your investor wants. But as far as the value is, like that's you're making some good cash flow at those numbers. Like it,
Oh,
uh,
yeah.
it
So,
you would keep in our own portfolio because
Right.
in the time that we don't sell the property, we own the property and it's in our portfolio. Oh.
yeah, you guys are awesome. Of course, I trust you. For people watching this video for the first time, right, Julie, and that some people may be skeptical, so they're going to ask themselves, what is the long-term ramification of buying these kind of properties? I know the next question I'm going to ask you is very hard to answer. Not only for this two property, we just went over. So in the next 1, 2, 3, 4, 5 years, what are the expectations for long-term investors buying this property? What kind of things that can pop up in the next few years that investor need to understand before they take action on in your market?
It's all kinds of projections and everything. I think you saw that Zillow predicted like Buffalo to be one of the hottest markets going up in the United States. So there's a lot of predictions, and you can't really necessarily depend on it. You got to do your own due diligence. And one thing that we do also is that these are cash flowing properties. So it's not like you have to depend. A lot of markets like Florida or California, you're buying really expensive houses,
Right.
and your return on investment is like less than your interest rate. Like you're basically losing money if your house doesn't appreciate, essentially. So you really depend on it appreciating. And historically, these properties have appreciated. Like my dad can tell you, like, he's been doing this 30 years, like things have gone up a lot in value. Like he's bought properties for like $2,000 before that are worth like $200,000.
Wow.
That there's some, but like, he's also gotten good deals. He's got to find good deals, but even still, like it over time, historically, it's not guaranteed, but like properties go up in value. So there's like mobile home investment people. Like a mobile home typically are the one asset that don't typically appreciate as much. So like but these are physical houses. They have foundations. Like they're solid houses that have historically gone up, and like a lot of these properties are now in these like Airbnb areas, and the government wants to put a lot more money into these areas. So it has, the areas have definitely improved, and properties have gone up in past years.
Yeah, as a matter of fact, Caleb, I'm glad you mentioned Airbnb, but Julie and I, we've been venturing into the midterm investment model that's up and coming. And of course, everybody talk about Airbnb lately, but something you and I should discuss whether your product can fit into a hybrid model, not just long-term rental, which is fine, nothing wrong with that. You can do a medium-term rental, rent it out for traveling nurses or healthcare professionals, 30, 60, 90, 120 days, digital nomads, so people relocating, and you can collect higher rent on a midterm rental model. And Airbnb in your market, and any potential in the future for your product to introduce to our investors for other investment methodology, as I went over?
Yeah, for sure. So we've been actually looking into more. I talk to like people in real estate all the time, and they're like, we're making like a killing on these like Airbnb rentals, and you do them up really nice. And a lot of the properties are in these because they're zoned by the city, and they like zone off blocks where you can do Airbnbs and where you can. So a lot of the properties we do sell, they are in these Airbnb zones, so you can make them that way. So the one thing you got to do though is like you got to furnish them out.
Yeah.
You got some more like initial cost, and want to make them really nice to do all of that. And then management fees are going to be a lot more too, just because there's a lot more money around, but you're getting more as far as like rent. Like if you're looking at a per day, as long as you're renting these out, especially in the summers, like Buffalo is like a really nice place. Like people and Niagara Falls, like it's not far like some of these properties that we sell at like 15, 20 minutes away from like literally Niagara Falls, like you could, there's a lot of, yeah. So there's a lot of potential there, and a lot of people are seeing it. It's a little bit more new. We haven't dipped our toe too much in it yet, but that is something that we are actually, I was talking to my dad about to maybe look into it a little bit more, because I've heard from a lot of like local investors too that they're like, hey, we're doing really well at it, so look into it.
You're getting me excited. So moving forward, let's discuss this matter some more, you and I.
Sure.
Out-of-state investors in California, wherever out there, what if your in-house property management can manage the medium-term rental model and even Airbnb for out-of-state investors? If you guys can do that, make it a turn. It will be a game changer in your market. Would you agree?
Yeah. So that's why we're looking. We're just talking about like switching up and trying to see like just testing it with just at least a couple of properties, because we got lots of properties going on. So we gotta just do it. Maybe do a couple test ones. So, yeah.
I will keep you reminding you, because I want to do that. I want to Julie, your 6 rental property, I'm pretty certain that at least one of your rental properties in Niagara Falls and Buffalo can be converted into a midterm investment model, maybe even Airbnb model. So how cool is that?
Oh, I think that'd be great. I think about that when we first started talking about this on the videos. I thought about that. I thought, man, that would be great to maybe convert one or two, because we do have, I don't know, most of them are in Niagara Falls, and most of the ones that we bought are in Niagara Falls. And I thought that is a good tourist area, so people are coming for the falls. Yeah, so just definitely keep us posted, Caleb, on what you guys are doing, because we would definitely be interested in participating.
Yeah, especially like you might want to consider, even if like a property were to ever go vacant, then then that's when you do like, so they like if you have a good paying tenant, like you might like why change that up necessarily, but like if if the tenant ever moved out or something, then I don't know, like again, I'm not an expert on the Airbnb, like we haven't dipped our toes too much. I'm just hearing from other people and know that other people are doing quite well doing it.
Well, Caleb, you and I going to continue maybe proactively to convert your market potentially into a medium-term rental and even Airbnb situation. So we're gonna have more discussion moving forward. Now you got me excited, because let me tell you, Caleb, my other market that I promote in Texas right now, we are also creating a hybrid model. We're always going to do long-term rental. This is the foundation of our long-term wealth building. But several of our market, Julie and I talked about it. We presented on the podcast many times recently, Julie, that some of our Texas market we are actually executing on a medium-term model. Of course, you have to pay extra for the furnishing and all that. That's an upfront cost. But in New Florida, and I fully intend to, our Florida market, we intend to do a hybrid medium-term rental as well. And when I looked in, Julie, when I watched the other videos, the other YouTube videos and other companies, people having success doing the medium-term rental in many markets, like very similar to your market, Buffalo and Niagara Falls, people having success doing medium-term rental, charging much higher rent in St. Louis, Missouri, in Detroit, Michigan, in even Ohio, in everywhere, in all 50 states, there are some element of success stories coming out of the regular investors like you and I, Julie, that converting their long-term rental into a medium-term rental and getting a lot more cash flow. They can succeed in their market, in the other Midwest market, even though you don't think of Midwest market as a robust, fast-growing as the one in the Sun Belt, like Texas or Florida. The properties are a lot. In California, Arizona, or Colorado, those housing prices are very expensive, very hard to cash flow. And they doing medium-term rental. And again, a lot of Midwest market are primed to do the medium-term rental. I'm very excited. This presentation, this video is really got me a lot more excited. So I'm gonna put the onus on you and you guys to continue to ramp up your market, Buffalo and Niagara Falls, to do medium-term rental and Airbnb, and introduce those models to our out-of-state investors, so we can do. Is that a realistic action plan?
Yeah, I want to test it out a little bit more too. So like, we'll be the first test it out, and then I could be updated on the progress with that and see how it goes. Because I don't have firsthand experience of this yet. I just have secondhand people telling me.
I've been doing a lot of research, and I'll send you some links about medium-term rental. I'll send you some resources from time to time, so you can continue to research in your market. So for that, Julie, have what any additional thoughts you have around this?
Oh, no, I'll just be excited to hear what you guys are going to do. Because I know a friend of my husband's has had an Airbnb, even like long before people really understood what Airbnb in the New York area. I'm not sure exactly what part. Now that it's more talked about and people are understanding it, I would definitely be interested in finding out a little bit more. Once you guys have been the guinea pig, you can bring it.
Okay, I tell you what. Let's recap again. I appreciate your time. This is a amazing value add everything presentation. A lot of surprises that I did not anticipate during our presentation. So anyway, to recap, your market, because you guys are doing such a great job. You've been around for 30 years. Your father started the company, and now his children, like you, Caleb, and your siblings are running the business. You guys are very transparent and very honesty and integrity, and do what's right for out-of-state investors. And we have a lot of investors that are still holding on to their portfolio they purchased from you several years ago, and I haven't heard anything. There are always some issues, right? Nothing really bad. So I guess they are happy with their investment so far. So you guys do a great job and great cash flow. These numbers I just shared are pretty realistic, but of course there will be vacancies, there will be maintenance, something we need to anticipate. But at the end of the day, your property management does everything. We have a lot of our investors, not just Julie, that bought 4 or 6 rentals at a time from over the years. And it doesn't matter how many properties they own in your market, they almost do nothing. Your property management does everything, does the vacancy turnover, cosmetic repairs, and get the tenant in. It's just like turnkey, passive. Julie can attest to that, right? What Julie can tell
Oh,
me?
I can totally attest to that. And I think that when I tell people that, we own property in New York, their first thing in their mind, how do you manage it? What do you do? It's so far away. And Seewing even had to explain to me, there's a landlord mentality and then there's an investor mentality. And investor mentality is what we are doing with you guys. You guys are doing all the work. Once we've gotten past the closing of the escrow, the management team takes it over and we never see it. I tell people all the time, I forget that we own property until the check rolls in on the 15th of the month. It's a very seamless process once you get everything locked down, and we have not been disappointed.
Yep, that was great. As we leave you, so again, my investors want to buy through your system. They ideally contact me as a courtesy consultation. Go through me and we'll pre-qualify them, do the loan, whatever, get the IRA or paperwork all set up. Then they contact you directly. You are the go-to marketing consultant for your market. Any final recap for you before we log out? What were your final thoughts?
Yeah, so basically, what we went over with you could get really good returns on a lot of properties. The returns are going to vary. Like the best way to know about the properties is the economy, and you could see the properties on the list, but that's just like a number. You could do your own research. You could look them up like on Zillow, or like there's a bunch of other sites like realtor.com and all that other stuff, and kind of just check things out. Street View again. And people also like talk to local real estate agents. Well, there's like a lot of avenues for looking at that properties, but the properties we sell a lot of properties, and we're planning to be here for a very long time and continue doing that for a very long time.
Very good. Thank you so much, Caleb Canazzi from Buffer Turnkey. Thank you, Julie, for hosting. Thank you so much, everyone who's watching this. Thank you so much. Hope all of you receive a lot of value from this presentation. This is Seewing Yee. Thanks for watching. I will see you next time. Bye-bye.